Hi guys, it's Kel once again, 30th of June, Friday. Thank God it's Friday once again. It'll be a long weekend, not really, but of course Tuesday is a US holiday, so be careful of today's market because 4th of July is always known for the market rally. It's something that has been happening for the years, and that's the reason why we've been telling people to be very careful on the short selling side, okay? And of course, Apple is just a headline away from the $3 trillion mark, and I think today it will be done, all right? So let's just see what do we have in store for you for today, all right? Disclaimer apply as usual, and thank you, Ames, for the kind sponsorship. All right, so let's just discuss what happened last night. Okay, the Dow Jones basically up by 269 points, but the Nasdaq was down by 24 and S&P up by 19. All right, so basically the Dow closed 200 points higher because of the major banks. All 23 major banks basically passed the stress test. But of course, we saw what happened the last time. Credit Suisse also passed the test, and what happened? So let's talk about that later in detail, yeah? And the thing is right now, the thing is this, other than a stress test, there was a revised upward GDP print elevated, elevated the recession fear right now. The thing is this, I'm quite surprised with the numbers. I'll show you some details, and then you make a decision over there. Because I've been trying to go online to check on this particular area, but seemingly no one really covering this. Okay, so let me know in the comment box. Okay, so basically we have JP Morgan, Goldman Sachs, Wells Fargo, all up by 4.5% to 3% because they have passed the annual stress test. But again, we all know that the stress test itself always has some limitation. And of course, they could be in a very perfect environment, yeah? But I'll leave it there for you to decide. All right, the thing is this, the upward revision of GDP again was a very positive thing. And of course, the drop in the jobless claims also helped it out. So in short itself, it seems like everything is perfect. The US economy is going to go to the sky, and apparently all is good. But there's an article from Straits Times itself that caught my attention. I'll tell you more in detail. So, but nonetheless, the number shows that, right, if today, if the Dow Jones and S&P all stay positive, then wow, the S&P is up by 14.5% this year. And of course, Nasdaq climbed 30%, the best first half performance since 1983, all right? And of course, the Dow is the one that's not doing that fantastic. It's only up by 2.9%. So that's the reason why I'm quite a bit of question mark on the Dow itself, okay? And of course, we all know that Warren Buffett, Berkshire Hathaway have added on more OXY. So that is a big question mark here itself. If they are adding on more OXY, are they telling me that, or telling us that they expect the crude oil price to go higher for the second half of the year? And will that cause more problem for inflation? There's something to ponder about, yeah? Okay, so let's buy into this, right? I've been telling my students this, if there's going to be another crisis coming in, buy Apple. Really, because Apple seems to be the darling, the company, the must-have stock in your portfolio. But at the moment, now $191 after hours price, seriously, I'm not going to chase here, okay? I'll tell you why. So the thing is this, right now, we are just a hair away from the $3 trillion mark. That means that if Apple today cross maybe 192, I think, by right, I think around there, we should see the $3 trillion mark. The first company that crossed the $3 trillion mark. And of course, what's the best thing happened before National Day, right, for US. So FYI, Apple, the weightage on the Dow Jones itself was 3.68%. So definitely that will again press the Dow higher. And of course, Goldman Sachs, who passed the test, has a weightage of 6.1. Definitely, again, there will be some buying impact on Goldman Sachs. So why am I going to chase here? Because now the analysts are saying that the stock will not stop here. It will go higher. Some even say it will go to even $4 trillion. Now, seriously, when I see something like this, I walk to the other side. Now, I'm not going to short the market right now. It's too expensive. It's too crazy now to short it. But to me, it's at PE ratio 32. It's kind of high right now. Seriously, for fundamental to buy right now is really not worth it. Okay, so a pullback. I'll pull back 170, 160 again. I think you can try, but if the market can come down seriously, if it's a new crisis or whatever, that will be a best stock to buy. What do you think? Let me know in the comment box. Yeah. All right, so let's talk about the data. Okay, so first of all, we have very good data this week. Okay, we have the core durable goods that was up better than expected, with the consumer confidence better than expected. Home sales was ridiculously good, so everything was perfect. And of course, the crude oil inventories dropped minus 9 million barrels. My God, that is really incredible, right? So the thing is this. The GDP number now, apparently the forecast was 1.4%, but it came out 2%. Wow, amazing. But when I look at the numbers of investing.com, right, I kind of not really to understand this, because the data shows that we are actually much higher, and the 2% was a lower number. And if you look at it right now, right, you can see that this is the data here itself is not equivalent to the chart. So I believe that there's some adjustment. Yeah, definitely, because this is the preliminary numbers and down is the adjusted figure. So that's the reason why. But the thing is this. Do you think that the US really grew by 2%? Well, I'll tell you more in details through a Straits Times article. But the thing is this, if you look at this pending home sales, this is not a good sign, because the pending home sales down by 2.7%. Now the market was looking at 0.5%, but it went out minus 2.7%, and it's a consecutive of 3 months of this negative pending home sales. So don't you think that something is wrong somewhere here? This is where it gets interesting. Okay, so let's look at this Straits Times article. All right, so the US first quarter GDP revised by 2% on export, consumer jobless claim fall by the most since 2021. Okay, that looks positive. But if you look at it right now, interesting. Okay, so the household spending, the engine of the US economy, rose by 4.2%, the strongest rate in nearly 2 years, as services outlay were adjusted accordingly. So, okay, that means that a lot of spending in the market, right? Okay, that is good, but it's more on the services side. And I mentioned this yesterday as well, right? The manufacturing is not really doing that well compared to the services. And the most important thing, the personal consumption expenditures, the PCE price index, excluding food and energy, rose 4.9% in the first quarter. So it's actually showing that inflation is still going up. But of course, more important is the government other main measurement of economy, the GDI itself, right, fell by 1.8% in the first quarter, making a second straight decline. So the market seemingly is not aiming or looking at the things that is important. They just basically take the one that they want to see, and then boom, they take a look, and then they lift it up. But the GDI is actually now for the second straight decline, right? This is not a good sign. And in fact, averaging GDI and GDP, the economy just grew 0.1%. That is nothing near to the 2% from the 1.3 expectation. You can see my point right now. Somehow they are not telling you the exact of it itself. But of course, our Business Times, Straits Times, right, do really go into that, because I compared the article between this article with the one in CNBC and Reuters and stuff like that. I realized that this is much more accurate. So what do you think about that? And of course, we also know that, right, the unemployment benefits has fell. That is again something interesting to take note of. And the last thing is this: on an unadjusted basis, yeah, claims decreased to 233,000, led by California, which reversed a large jump from the prior period. All right, so which means that things are getting better. Okay, so overall itself, right, the US economy seemingly good, but some part of the data itself is not actually linking to what I consider as a good economy. So all I can say is this: I believe it's now being fueled, driven by the FANGs counters, especially like Apple, like this Tesla. But the thing is this: if this is continuous, right, things may not be that fantastic. So of course, you will say, hell, look at it. The 23 banks have weathered the test. They have passed the stress test. So all is good. Why are you still so negative? Well, of course, passing the test is fantastic. But remember, just last year, they also passed the test like Credit Suisse. And what happened to Credit Suisse? They had to be safe. So what do you think about this round stress test? Well, I took a look at this itself, not in detail. But the thing is this: I can see that Credit Suisse Holding, they have a risk-based category of 3, okay? While you see Goldman Sachs, all right, Goldman Sachs, where are you, Goldman Sachs? Hey, where is it? Okay, Goldman Sachs here, category 1. Okay, so it's like, okay, but the thing is this: if they are category 3 of the 23 major banks, I'm just wondering, some of the smaller banks, where would they be? Okay, so my question mark is this: let's hope that they are they're not biased, because if it's going to be the same thing again, then this stress test is pointless, really. All right, but the thing is now, Jerome Powell has spoken this week, and he says that is more restriction is coming, okay? In fact itself, there's a possibility of hikes at consecutive meetings. So which means that he's dropping hint or directly hinting that there will be 2 rate hikes back to back. And of course, we already expected it to happen. Just that the market is just speculating, no, maybe it will not happen. Maybe 1 more to go, right? The market is buying into 1 more to go. So the thing is, people is asking that if that's the case itself, then what's the point of the dot plot, right? The dot plot really shows that there's a most of the people are looking at, more of the committee members are looking at least 2 hikes, at least 2 more hikes. This is very clear. So the thing is this right now, if 2 more hikes, they'll bring it to 5.6%. And of course, look at it right now. The Bank of England is looking to increase interest rate because they believe that the inflation may hit back to may go to even 10%, right? So the thing is this right now, looking at the interest rate to hit 6.5%. So even Germany is expecting that. So what do you think, guys? A lot of things shows that there will be more rate hike coming in if they really want to combat inflation. And of course, right now, if they're going to increase interest rate, definitely the US dollar will see. And truth be told, I shared with you back then that if the market at 102 will be strongly supported on the US dollar, and I expect it to go higher. And this time around, look at 105 mark. Now it's trading at 103.53. So not surprised to see 105 coming in. And of course, if US dollar go to 105, then we all know that commodity prices will be hit, right? So one of them will be gold. So we are 26 days away. So that will give them enough time to them slowly but gradually to hit the 105 mark. Because now, based on the Fed Watch 2, we are 89.3% confirmed that we will see a 25 basis point rate hike in the month of July, right? Happening in about 26 days time. So all these speaks for itself, and that's the reason why you can see right now gold cannot buy. Now I know that a lot of people have been trying to buy gold around this area 1970 to 1920. Many schools are expecting a blow up towards upside, but of course for us, we notice that the selling momentum is there, and once the KRW and the KSI, both of them turns red color, we all know that the selling wave will likely be happening. Now, of course, the gold has been trying its best to recover, but if gold continue to fall, I believe that gold can see 1875 in the next 2-3 weeks. But of course, again, if there's some huge buying again from the market because this thing is cheaper right now, this may turn away. But if you're talking about current level now, there is a very good chance now the 1900 level we can even see coming down to 1875. Now coming 1875 is just one level to watch out for. Things can go lower, but again, for people who like to buy gold, anything below 1850 to me itself is a good time to buy some gold. Let's see how it goes. Yeah, I'll update you guys more in details. But of course, let's just face the fact. Okay, like it or not, it's all right. US patriotic, right? We all know that. So the thing is this, if you look back the last 2 years, every time when before the 4th of July, Independence Day, we can see the stock market always rally. Okay, this is something that you have to understand. So look at it right now. We are almost identical at the same place where usually the market will rally, right? So I'm not half surprised to expect a rally in the near 2-3 days. Okay, that is today, then Monday, then Tuesday, we have a holiday. But of course, I want to share this with you. Interestingly, after a few days later, there's seemingly some huge selling coming in. It happened before, right? In almost every time it happens. So take note of that. This is going to be very interesting. Now, of course, if you remember, I posted this to you guys. Remember the NASDAQ seasonal pattern, right? You can see, right? This is something that is interesting, yeah? Apparently, right, towards the end of June, we do expect the market to recover. And that's the reason why I've been telling you guys this to buy back your shorts the last 2 days. And now the thing is, this is very interesting. At the start of the July month, very interesting, based on the seasonal pattern, there should be some selling. Okay, so maybe we'll see some profit taking after the ID4 results. So traders, you just take a look at this, okay? Again, this is just a sharing thingy. Nothing's 100%. I'm just wanting you guys to understand this, to buy before ID4 if you want to chase after stocks. Then after that, after ID4 itself, just take a profit and go, because sometimes itself, right, things repeat rather interestingly, all right? So at the moment now, I share this with you guys. There is no way you can short the market that we shorted recently when the market turns the bar. There was the 13th to the 15th of the month, which is right here. And I mentioned that right after that, you can take a short position. And for a couple of days, we were all profiting. But I was giving warning that although the market was coming down, the big boys are buying. The momentum are still there. And my KRW showed that the overall momentum is still buying. So that's the reason why we know that the Dow can't really go down too much. And truth be told, the market rebounded right now. So I'm not half surprised to see the market trading a little bit higher. All right, probably 34,250 range, probably. Now, around there itself, a good time to take some profit ahead of the weekend. So I like to decide, okay, but I still think that the Apple will hit the 3 trillion mark later on today. So that's the reason why with the TWB system itself, you know that even though you're shorting the market, you must be very careful because the market can actually rebound on you itself, right? So that's the reason why I inform my students to go long in the market, including crude oil and the Dow Jones, right? So this is how we tell our students to profit together from the market. Now, to wrap it up, I want to show something very interesting on the Apple shares, the OXY shares. Yeah, sorry for the sudden intermittent drop of the line. Not too much happened. Okay, the thing is this: the last few days, you can see OXY based out at $56 and went back to $59. Why? Because apparently you can see the huge volume came in. Warren Buffett bought more shares, so the price came down. Warren bought more shares. Interesting. So that's how the capitalism works, right? They press the price down and everybody freak out, cut losses and stuff like that, because probably they use a low here itself as a guide. And when the market broke below it, a lot of traders will start to short the market or cut loss, right? Because they think that it's over, bam, the price goes up. Now you understand why Wall Street play this game fantastically well. You really need to play with them. You shouldn't be going and try to use your understanding here, because you can see every time they would like to fake you out this. Now, Warren Buffett buying? Are you sure, Cal? Yes, indeed. He has now bought more than 25% already. So the question is this: why is he buying a downtrending counter? Well, the answer is this. If you look at the crude oil price right now, the crude oil price has an impeccable movement with the OXY. So every time it hit a peak, you can see that the share comes off. If the market hit a bottom, that's where the share goes up. So it's really incredible. The OXY and the crude oil shares, they go in tandem. So that's the reason why right now it's almost, you can say now, with that understanding, you can see why crude oil price actually goes up the last 2 days, despite what's happening. So the question is this: if I'm a Warren Buffett and I bought a lot of OXY and my average price now is, let's say $60. So if I want to profit from it as well, right, then that means my OXY share has to go at least to $80, right? At least $80. And if the OXY shares and crude oil price goes in tandem, then how high must crude oil go? So let's say now the crude oil is at $70. And if they go in tandem, then if the OXY share go to $80, then that means that the crude oil price is expected to go to $90. Then that will really defeat what Jerome Powell is trying to do and what Biden has been doing, right? So that is my question mark itself. So to me, I think that still the same. I stick to my guns on this. I believe that OXY will go to $80, and I believe that that will propel the US crude oil to go higher too, because that is how it works, right? Because US crude oil goes up, OXY shares goes up. That is actually what is happening. So let me know in the comment box, and I will see you guys next week. Have a great week going. This is Cal signing off. Take care. Bye-bye.